Well, hi, it's Chris here from Hunter Wealth, and welcome to another one of our Meet the Fund Manager investment series. Today I'm kindly hosted by BetaShares. BetaShares is a leading provider of exchange-traded funds, ETFs as they're called, founded back in 2009 now. They manage over $50 billion in assets across cash, fixed income, property, Australian shares and international shares, now serving well over 1 million customers. Today I'm joined by their Chief Economist, David Bassanese. Thanks for having us, David.
Great to be with you again, yeah.
I've interviewed David for the last 8 years, so I'm looking forward to what you talk to us today about all things economic. David's been an economist since 2014, was a leading commentator for the Australian Financial Review, also worked at Macquarie Bank and Federal Treasury, so very, very well placed to talk to us about all things markets and economies. David, obviously all eyes have been on Trump and the trade policies. It's wreaked havoc on markets. It's made our investors very nervous. So what are the broader implications globally, but also on inflation?
Markets have been under the back foot because of the on-again, off-again nature of the tariff announcements really since February. Then he came out, of course, in early April with the so-called Liberation Day and the reciprocal tariffs, and they were like just basically a lot larger than anyone expected. So much so that in and of themselves, they could be big enough to hurt the US economy, push it into recession, even though, Donald Trump himself thinks it's a good thing for the US. But the reality is, tariffs are a tax on imports. They will put upward pressure on US inflation and downward pressure on US activity because higher import prices are going to hurt US consumer household income and or hurt corporate profits. So that has been the reaction to those announcements is that although Donald Trump in and of himself thinks that it's a good thing for the US economy, and even if you think there are long-run benefits of improving trade, reducing the US trade deficit through higher tariffs, the short-run impact could well be recession, and that's been the issue. Now in Australia, the good news is that we're not raising our tariffs. Anything Donald Trump does to raise tariffs is an issue for inflation in the US, but not in Australia. So here we just face and even the direct effect of the tariff increases for Australia, not that large. Again, we only were subject to a 10% tariff. Some other countries subject to a larger tariff. And even they've now been whittled back as we speak. There's been an announcement with regard to that. But the tariff hit to us wasn't that large, and our exports to the US aren't that large. I mean, they're significant, but it's only something like 5% of our exports go to the US. So that's the situation at the moment. I think we are more worried about not the direct hit to us from the tariffs, but more the broader impact on the global economy. Anything that sinks the global economy will reverberate onto Australia. And I think markets here have reacted by just increasing the speed with which the RBA and the depth with which the RBA may cut rates this year.
You've talked about with markets and they're clear and present. So back in February, the All Ords, for example, was trading at 8,800. It's dropped off to 7,500, and then just as early as last night, as we've all seen, up a fair bit back up over 7,900. So yeah, haven't got a crystal ball, but where do you see markets progressing?
So Donald Trump has blinked, as people are saying. Like he announced his big tariff increases. He's now scaled that back to basically 10% across the board tariff for countries, and then possibly more depending on what he negotiates with countries. So, but China is still facing over 100% tariff increase. So that's a significant. So overall, even though he has dialed back the tariffs, they're still a big hit to the US economy. And the other thing is that even if he does negotiate with countries about tariffs over the next few months, it's going to leave businesses in the US still with a lot of uncertainty. They just don't know what tariffs they're going to face. And businesses, when they face uncertainty, they just mothball investment plans. They dial back on hiring people. So it's still going to have a depressive effect on activity. And there is, sad to say, potentially a risk that it still might tip the economy into recession. So there is... markets have bounced overnight on relief that Donald Trump has, adjusted, but I think there is still some volatility and some tricky days ahead because of the uncertainty that's still surrounding this policy.
You mentioned and touched on interest rates. So central banks had a bit of an easing bias throughout last year, and then with the inauguration of Trump, things sort of seemed to turn. But then I've heard this last week that maybe there's 4 interest rate cuts out of the RBA. Do you see that?
Yeah, well, the markets at the moment are pricing in 5 interest rate cuts. The futures market here has got the cash rate going from 4.1% today to about 2.7% by the end of the year. So I think there's certainly at least two. That was my base case before the tariff mayhem that's hit us now. But probably, now probably at least 3. I don't know if we need to get 5. We'll see if the US does go into recession. Yes, we'll get 5. We may get the cash rate at 2.5%. Early next year. Certainly by May, I think the RBA will cut rates. And again, my view was that they were going to cut rates in May irrespective of Donald Trump's tariffs, because the inflation story in Australia has been improving. It's been coming down, and they already cut rates in February. And I think the CPI, the Consumer Price Index that we do get in late April, was going to show a further decline in inflation and allow the RBA to cut rates again in May. But again, with the tariff mayhem, it's just added to the case for that rate cut, and possibly they might even do a bigger rate cut than 25 basis points.
Whilst President Trump's relented a little bit on the global countries, he hasn't on China, and he's lifted those tariffs now to 125%.
Yes.
So with that relationship pretty strained, where do you see that, and what's the impact for all of us?
Well, so, China imports something like 15% of US imports are from China. So it's not 50%, it's a small, but 100% tariff increase still works out to be like, almost 2% hit to consumer prices in the US just from that tariff increase. And at the moment, there's a Mexican standoff between China and the US. Neither side willing to back down at the moment. So it's, again, that's why I think there's a lot of lingering uncertainty, and I don't think potentially the worst is over in markets. So it's really just a case of how they are going to both save face. I think both want to de-escalate things, but they don't want to be the first. They don't want to be the one to be seen to cave in. So there's egos on both sides now, I fear, that are standing in the way of a more rational outcome. But so that's the issue at the moment. But again, China is facing issues in the United States, but it still exports to many other countries. So I don't think the direct hit to China from this it's more of a negative for the US, to be honest, than it is for China. I think China can, through fiscal policy, keep stimulating its economy if need be. And it can also export to other countries and keep its economy afloat.
You mentioned recession, the R word. So was it as high as 60% possibility out of the US and also just some of the other global economies, China and the European Union, et cetera? So how real is that?
I think it's more of a risk for the US. And I mean, what's been interesting with the tariff mayhem of the last few weeks, it's been the US market that's been hit harder. The US dollar that's been falling. So markets have actually just judged that the tariff increases that the US have proposed are a bigger risk to the US economy than other economies. Not to say they won't get hurt, but I don't think the tariff increases on Europe or on China alone would be enough to tip those economies into recession. For the US, possibly yes. Certainly what he was announcing before the scaling back of the tariffs, many economists, Goldman Sachs, Morgan Stanley, not just, were thinking there's a greater than 50% chance of a recession. Now it's dialed back a little, but it's still probably touch and go whether they can avoid it.
All our clients have pretty diversified portfolios, but are there some thematics now in this sort of cycle that we're in that we should be looking at? Gold's obviously accelerated for a long period of time. A US dollar play, or are there some other thematics that perhaps we should be looking at?
Look, I think some of the opportunities at the moment, again, it's probably premature to say the worst is over for the equity markets. I would love to say dive back in and start buying, but I think there's still some caution ahead on that front. But look, gold, I think, is one that's been doing well for a variety of reasons over the last few years, particularly central bank buying of gold to diversify their exposure away from the US dollar. And everything we've seen of late just adds to the case for central banks to do that. So I think gold will continue to do well. So you can buy gold bullion outright, through an ETF if you like. You can buy gold miners And there's some, we have an ETF that gives you exposure to global gold miners, for example. Fixed rate bonds, particularly in Australia, I think are still well placed to deliver good returns because the RBA will be cutting rates aggressively. Some of that's priced into the market, but the longer term bond yields haven't really fallen in a meaningful way yet. Despite that,
So there could be some capital up.
Yeah, I think there's some catch up at the longer end in Australia to come through. And Aussie dollar is cheap actually, so Aussie dollar's now broken 60 cent, 58 cents. So again, maybe in the short run it's not going to rebound quickly, but longer term view, the Aussie dollar's looking pretty cheap. It's probably been unfairly hit in the last few weeks.
I'll put you on the spot, David. David Bassanese got a spare dollar. Where do you put it?
In terms of marginal dollars, I'd be buying Aussie bonds and I'd be buying gold.
Right.
Would be, so of the, along with what I was mentioning, yeah.
Okay. Well, David, thank you again.
No worries,
for all
great
your
to meet
words.
you.
Good to see you again. For all of our viewers, please give us a call if you'd like some additional information or just some reassurance about your own portfolios here at Hunter Wealth, or speak to one of your advisors. But David, thank you again.
No worries.